afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Justin Nielsen here with a breakdown of the action in today's session. And the market is still seeking direction, but we are starting to see more setups, Justin.
Yeah, that's something we were talking about on IBD Live this morning. So a couple that we can take a look at, actually a few that have already moved, but we'll kind of look at what the setups look like. So Rio Tinto today, that got added to Swing Trader. Also looking at Schlumberger and another setup in Blackstone.
All right, let's do it. First, analyze the market action today by looking at the major indexes. So here's the Nasdaq Composite, finishing the day down 0.6%. The S&P down 0.4%. The Dow roughly flat, and small caps, the Russell 2000, up about 0.5%. So it's not like we had a lot of damage here today. Justin, what does today's session tell us, if anything, about the market's direction?
Not much, I would say, because really, if you look at the rally that we had last week, really powerful as the Nasdaq Composite got back above 14,000, and we're just kind of consolidating those gains here. So look, if we hold here, that could be good because what it could do is it could allow some of these setups to finish up. It could allow some handles to get formed on some of these bases, or allow some of these bases to finish. So that could be very constructive action, but it could also fall apart here. So if we start seeing it kind of come back to the lows of what we saw just a few weeks ago, that big reversal that we had, then this could be a market that's a little bit more in trouble. So at this point, I think it's 50-50. It could go either way, but when it's that close in terms of which direction it could go, that's usually where I usually am sitting out, because hey, when you don't have an edge, why play?
And holding above 14,000 would be great, but also the low of the follow-through day, right, Justin?
That is an absolute line in the sand, because the follow-through day, that gives us an indicator that you have potentially changed the trend into an uptrend. But if you start losing ground there, and again, one of the biggest things that we look at is as an early warning signal is that low of the follow-through day. You lose that, that's an early signal that your failure rate is going to go up significantly.
All right, let's also check in on QQQ, the Nasdaq 100, because Meta Platforms, Facebook, not doing too well, maybe weighing on the Nasdaq 100 here today, but down about 0.8%, after hitting resistance at that 200-day.
Yeah, in the same way that the Nasdaq 100, a lot of these big cap heavyweights can drive this index higher and make it mask a lot of the weakness on the Nasdaq Composite. In the same direction, the other way, when you have some of these that are really kind of lagging, it can weigh the whole thing down. And I think that's what we saw a little bit today, as the Nasdaq 100 fared worse than the Nasdaq Composite. But again, you can see that we are looking at that same level, that follow-through day that we saw. We're getting closer to that, challenging it a little bit more. But if we do break below that, that would be a cause for concern. Not necessarily that you have to go short or get canned goods and go into the bunker, but it is a sign that, hey, this might have a requirement for more time before you can really start making progress again.
Yeah, let's also take a look at the S&P 500 here, and that is not the correct way to type it. Now it is.
Yeah, there you go.
So down here a little bit today, holding above the 200-day after getting close to the 4,600 level and the 50-day line last week. But as we look at the S&P 500 here, Justin, what were some of the top performing sectors today?
Well, no big surprise. Energy, XLE, the sector spider ETF. I know it's one of those, we just keep on talking about it over and over. You look at our industry groups, it's the top performers are filled with oil and gas, whether it's the U.S. explorers and producers, the international, the field services, the drillers, the transport pipeline, you name it. If it's got oil and gas in the name, there's a good chance it's doing well so far this year. And so that's definitely one area to be looking at. Now, the biggest problem here is how many of these stocks are extended. So we'll talk a little bit about that. But you have the financials looking a little bit stronger. We've been talking a lot about the 10-year Treasury yield. You can put that in 0TNX in MarketSmith. That 10-year Treasury yield had basically a breakout last week on Friday. So, that's not necessarily a good sign for growth stocks. And as a result, we've been seeing a little bit more favor being put on the stocks with lower PE ratios, not the high valuation names. That's why a lot of the growth names have been really kind of destroyed in terms of their chart action. So that's just something to keep in mind. And, some of the financials that have been benefiting, insurance, some of your money center, big banks like Wells Fargo, Bank of America. So that seems to be where a lot of the money has been gravitating towards lately. It's definitely a bifurcated market. As much as we're looking at the indexes right now, there are these areas of strength that are kind of bucking the indexes action. So those are kind of where you should be focused on right now, that relative strength, as opposed to some of the stocks that were the high flyers that have really come down off their highs a lot.
Yes, that's exactly right, Justin. All right. And we're going to be taking a look at an energy name and a financial name here in a sec. But first, let's take a look at Rio Tinto in the mining metal ores group, added to swing trader today, and for a good reason. Some really nice tight action, and then moving higher, clearing a trend line today.
Yeah, so this is one of the things that you just want to be on the lookout for when you start seeing tight action around moving average lines, especially, and that's what we saw right there at the 200-day moving average line. We put this on early in the session, about 10 minutes after the open, as it was breaking that downtrend, and it just continued moving the rest of the day. So that was a positive sign. This is something we also talked about on IBD Live this morning. I believe Scott St. Clair brought it up. So and it's not alone. The mining metal ores group has been showing a lot of strength. You've got other members of the group, BHP, just for one. It recently had a ticker symbol change. But there's other members of this group that are showing strength. So it's not just Rio Tinto acting on its own. There's a lot of members of this group that have been acting strong. So keep that in mind. Now, when you look at either BHP or Rio, they both look a little gappy, and that might give you a little concern. But keep in mind that this mainly is trading overseas. This is a UK-based company, and so ADRs sometimes will have a little bit of a gappy look as they kind of adjust once the open happens to all the trading that happened in its regular market. So that's not something that worries me too much, but I think that tight action that you mentioned at the 200-day moving average line was certainly something to look at and observe. And then when you saw the move here today, acting fast could have already gotten you a nice gain out of this one.
Yeah, and volume really supporting the conviction there with this trade. All right, we'll see how it goes. It's on Swing Trader. We'll see how quick we need to be with taking profits in this kind of market.
Well, we already took our first profit at 3%. We're taking our profits very early on Swing Trader, so we had a 3% gain already today, and so we took our first third.
Well done to the team. Okay, let's take a look at SLB Schlumberger, up about 5%, a nice upside reversal. Didn't come all the way down to its 21-day line, though, when it did earlier in January after earnings, but an upside reversal at the 10-day line.
Yeah, and I mentioned how XLE, an energy sector spider, that was the top performing sector today. At one point, it was the worst performing sector today. So it was a very, very big reversal on that one. Now, Schlumberger, like a lot of the oil stocks, really started the year off strong. You saw a lot of these oil stocks breaking down trends, getting back above their 50-day moving average lines on the very first trading day of the year, and many of them just really haven't looked back. And so when you see a stock like this, you might be looking at it and saying, oh gosh, I missed my opportunity. But look for new opportunities. And I think one of those was when it did cross or did pull back down to the 21-day moving average line, got that support, nice reversal there, moved up again. And then more recently, we saw a nice little tight action here, breaking a smaller downtrend. As you mentioned, it didn't get down to the 21-day moving average line, but I think the big outside day today, closing near the highs of its trading range, that's something that's powerful. That's generally something that is looked at as a positive. So maybe a little bit extended here, but just keep in mind, take a look at this overall look to the chart, because this is something that you can learn from and recognize when you see it next time.
Yeah,
there will always be a next time.
Yeah, you're right. Because what we have, you're right. We've been saying a lot of these stocks look extended. This has been a group move for going on a month plus now. But if you do have kind of that FOMO and you want to get exposure to the group, instead of just buying anywhere on the chart, at least, you have a case for adding a little bit at something like this when you see this kind of action?
Yeah, I mean, whether it's a pullback or tight action, what ends up happening is you just kind of get a little bit of the mean reversion. You're moving back to your moving average lines, and that can be a great place to be setting your risk levels. So, whether it's the 50-day or the 21-day, if you're kind of setting your risk as, okay, look, if it crosses below this line, that's where I'm out. The lower that percentage is, the less risk you have. Now, you could also adjust that with position size, but either way you do it, you have to be managing your risk, especially in a market like this where there's a lot of volatility and you can get caught on both sides. Whether you're shorting or going long, if your timing is off at all, it's not very forgiving, and you can be losing money on both ends.
Yeah, not forgiving, definitely key phrase there in this crazy market. Let's also take a look at BX Blackstone, which had a really strong move going from 101 to almost 140. Definitely put the stock on our radar, but we were wanting to see a little bit of a handle form. And Justin, it looks like we're getting that now.
Yeah, I always get nervous when you have almost a, what is that, 30 some odd percent, almost 40% move in a matter of 7 consecutive days of gains. I'd like to see a pause there. And it always makes me nervous when you get a breakout there. So we did get that breakout above a double bottom at that 136.56 high, the middle of the W. So we got that breakout, and now we're tacking on a handle there. So that just makes me feel a little bit better. Rather than buying something extended that many days, now we're giving a chance to pull back. And look at that volume profile. That volume is just drying up in this pullback. There's not a huge amount of selling. And notice how each one of the days, it's really resisting the selling. It's coming down, but then it's closing near the top of its range. So I think this is really good, ideal action for this stock. And the volume profile in general, it really started with that big pink day on January 24th. If you look at that, you see the big pink volume. And now that's normally something, when you see a large volume on a down day, something that would make you concerned, but you have to look at that price action. And when you look at the price action, that was a very constructive day. Big reversal, a lot of price discovery, closed at the top of the range. So I would actually look at that volume as being constructive action, and it remained heavy that entire time. And now it's drying up on the pullback. I think it's looking pretty strong. This actually just got added to the leaderboard watch list. This is one that we're going to be watching ourselves. So could be setting up for a potential new entry. And it's in that finance group, which is one of the groups that is looking stronger.
Yeah, a pretty compelling chart when you break down that price and volume action, Justin. Thank you so much for that. And thank you all for tuning in. I got a couple of announcements for you. So we have David Ryan on IBD Live tomorrow. Make sure you tune in. It's going to be a great show with everything that's been going on in the market lately. On Friday, we welcome Charles Harris to the show. And on February 16th, we have an upcoming webinar with our very own David Saito Chung and Ken Shreve that is all about short selling strategies. So a lot of fun stuff to come. And I guess I forgot also, this Friday, Justin, you and I are going to be on Barron's Live talking about how to have a measured approach for getting back in the market when you do see renewed signs of strength. So that'll be fun as well.
Looking forward to it.
Jinx. All right. And you can check that out at barrons.com/live. Thanks for tuning in, everyone. We'll see you back here tomorrow.